Hi, in this video we're going to dive into the technical aspects of trading, specifically focusing on price action and volume. These are the fundamental components that every trader, whether a beginner or experienced, needs to understand to make informed and successful trading decisions. By concentrating on these key elements, you'll learn how to interpret market movements accurately and identify strong entry and exit points. Unlike the psychological aspects of trading, which we don't cover today, our emphasis on technical analysis will equip you with practical strategies that you can immediately apply to improve your trading performance. So, if you're looking to enhance your trading skills and gain deeper understanding of market dynamics, this video is a must-watch. Now, in trading, there are two different parts. Part 1 is all psychological and Part 2 is all technical. Now, we're not going to focus on the psychological part, but we're going to focus on the technical part today. In the technical part, there's two things that we should all put all of our focus on. Those two things, in my opinion, are price action and volume. We want to put all of our emphasis on price action and volume as much as possible. Now, I see a lot of traders, when they get started, focus on indicators. They'll try to find some magic thing in the market that will tell them when to buy and when to sell. I will be the first to tell you that that doesn't exist in the market. There is no magic indicator or magic anything, but what does exist in the market is understanding who is strong. Is it the buyers or the sellers? Who is more aggressive? The two components that we can start off on an introduction level to understand what are by focusing on price action and volume, as mentioned before. Now, if you have so many different lines, indicators, and things like what on your chart, just get rid of them. When I first started out trading over 5-7 years ago, my chart was filled with so many indicators, so many lines, that I wasn't able to identify what's a good point to enter, what's a good point to exit, or how to should actually manage my position. Over time, I realized having so many different indicators and having so many different things on my chart was actually just noise. The two things that everything boils down to are price action and volume. But before moving on, do not forget that in our channel, besides all that useful materials and guides, we can give you profitable strategies and educational content. Now, I keep repeating these things because I want it to be hammered into your brain to understand that these are the two most important components of trading. So let's break down what volume is. Volume is the transactions in a marketplace, right? So if you see something that has a volume of 1, that means there has been a transaction of 1 sale. One thing that people get very wrong about volume is they think that volume indicates there are more buyers or more sellers. There is no such thing as more buyers or more sellers in the market. What does exist is seeing more aggressive buyers or more aggressive sellers. Then you see something has a volume of 1, that initially means that there was a buyer or a seller that agreed on a price and then transaction happened. If you see volume of 10, that means that 10 buyers or 10 shares from one side had to be sold and 10 shares or contracts from one side had to be bought, which equates to that number 10. Now, what we can decipher from the volume is the buying side is more aggressive than the selling side. That is something that we can decipher by volume. A lot of traders essentially overlook this part or overlook this component of volume. Now, to decipher who is stronger, we have something called an auction market theory. The market is a whole auction place. We have buyers and we have sellers, as mentioned, trying to find an equilibrium in price on every transaction. We have something that you guys have seen before where we have to bid and we have to ask. In the bid and ask, the way that works is we have people that place orders and we have traders that place orders, institutions that place orders. Then they place orders, they either hit a market order or a limit order. In the marketplace, we can see this happen on level 2. We can see the bids, we can see the asks, we can see everything being executed on time and sales. So now, obviously, if they're placing a market order to sell, they're being aggressive on the buy or sell side, depending on what side the market order is going in, or they're placing a limit order. Then they place the limit order, you start seeing that on either the bid or the ask. If a financial instrument is going higher and higher, and volume is also going higher and higher, that means that there is a support of interest on those buying levels or those new levels that the market is going to. But imagine the price or something is going higher and higher, and the volume is staying flat or volume is going even lower. Low volume is indicating that there is no interest at those levels. But if volume keeps going higher and higher, that will showcase that they're seeing interest at those particular levels. So there's the basic understanding of how volume is one of the most important things, which is right next to price action. So, as I mentioned before, there is a lot more to volume, a lot more to understanding order flow, and a lot more to understanding the auction market theory that the market operates based off. But before we dive into that, let's go into the second part, which is understanding price action. To me, price action has always been king. There's one thing I really focus on. I like to look at what price is telling me. I like to focus on what is happening in the market. What is the action that the market is showcasing to me? What is the accepted price that the market wants? What direction is the market going in? Once again, I combine that with volume, as I said before. But before we dive deeper, remember that our Telegram channel offers more than just educational content and guides. We also share profitable strategies that can make a real impact on your trading. So join our community to gain access to these valuable insights and start trading more effectively. Well, in price action, there are a lot of different components that you can look at. It goes into looking at candlesticks, looking at supply and demand, looking at support and resistance, and putting those pieces together. The idea is to understand where the strength is, to understand what areas the market is comfortable in trading, and the area the market is accepting a certain price. If the market thinks that the market's current share price or stock price or forex price or whatever is at a fair value price, the market will trade around those levels. There are times that fair price will adjust due to economic news, due to Fed announcement, due to earnings, or something that presents in the market. That will create imbalanced and aggressive buying and aggressive selling. Sometimes we might see aggressive buyers step in and dive the price higher. We kind of see that on charts, and seeing that on charts allow us to visualize and understand that the market is telling us, is the market actually strong? Is the market actually trending? Is the market having a strong breakout or breakdown? Is the market really selling off, or is it just a trap? Putting those two things together gives us a huge understanding of the market within itself. The indicator, RSI, people say if RSI is above 70 or if RSI is below 30, you should buy or you should sell, whatever the case is. What you have to understand is RSI is a lagging indicator, which most indicators are. Not every single indicator, but the majority of indicators are lagging, meaning that price has a formulate first and then the indicator follows, making it a lagging indicator. No matter what happens in the market, the indicator or the majority of indicators will always be behind. The two things that will be ahead are price action and the volume of the transactions happening in the marketplace. Don't forget to join our Telegram channel. There you can access a wealth of free content, not only saves you time and money, but also enriches your trading journey. Our channel provides real-time market analysis, insider strategies, and comprehensive tutorials that cater to both beginners and seasoned traders alike. That information is what we wished for when we started trading. So, let's go back to the indicators. If you have indicators and a ton of nonsense on your chart, take it off and simplify your trading. Focus heavily on price action and volume. Use these two things and to build your trading strategies, to build your playbooks, and to build a strong understanding of markets. Develop a strong understanding of why the markets are going up, where we're seeing an imbalance in price, where we're seeing an imbalance of strength in the overall market. That will help you to understand everything on a much deeper level instead of clogging your charts with useless data. Now, if you are a more advanced trader who has been trading for more years and understands price action and volume on a deeper level, I will make a video on order flow and how I look at the markets at a very deep level. What I'm touching on right now is just the surface level. There are deeper layers that we want to understand to truly understand the strength, the imbalances, where real supply is sitting, where the traps are sitting, where we have issues with liquidity, and so on. These deeper layers will be broken down in the upcoming videos. If you are not exposed to any of this, take a step back and simplify your trading. Don't overcomplicate it. Don't go looking for any sort of crazy indicators. Don't draw a million crazy lines on your charts. Don't look for crazy chart patterns. Understand volume and price action, combine them as layer 1, and in the upcoming weeks, we will build into layers 2, 3, and 4. With that being said, I hope you found the value in this video. So comment down below and let me know what you use in the markets to trade, what indicators you use, and what has worked for you specifically. Maybe there is an indicator that works and I'm not exposed to that yet, so I would be very happy to hear your thoughts. I hope you found value, and if you did, give it a thumbs up and give us a follow. Thank you so much, and I see you in the next video.